Leaders of the East African community postponed the signing of economic partnership agreements with the EU to December. Ghana pumps first oil from second offshore TN field. Plus, Zimbabwe's government cuts growth forecast for 2016 as it plans 25,000 job cut in the civil service. Hello and welcome. Thank you for joining us on Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. We'll begin the program with the fact that the leaders of the East African community have postponed the signing of economic partnership agreements with the EU to December. Kenya and Rwanda fear they may lose access to European markets. East African heads of state met in the capital of Tanzania, Dar es Salaam, on Thursday, September 8, to discuss the ratification of the European Partnership Agreement. Tanzanian President John Magufuli, who is also chair of the bloc, demanded more time to assess the impact of the agreements before the actual signing takes place. Out of the 6 EAC countries, Kenya stands to lose the most if the deal is not signed. Tanzania has exclusively maintained that it will not append its signature on the agreement until the country's demands that focus on the best interests of the people are met. In the meantime, Australia will concentrate on a free trade deal with the European Union before starting post-Brexit negotiations with the United Kingdom. After a meeting with members of the European Parliament in Brussels, the Trade Minister Steve Clubb said that it will take years for Britain to complete the process of leaving the European Union, so Australia will pursue a trade deal with the bloc first.
And contrast the two. We have mature, advanced discussions with the European Union. We've got a scoping study that's nearly finished, and I'd hope the formal commencement of FTA negotiations in the first half of next year. With the UK, we have the UK remaining a part of the European Union for at least the next 2.5 years or thereabouts. So to compare those two, I think is comparing apples and oranges. It really boils down to whether or not we are able to capture the benefits that flow from a free trade agreement, and that predominantly is higher levels of economic growth and the positive impact that that has on employment. My clear message from Australia's experience is that free trade agreements drive economic growth and deliver jobs.
And for the global market, we begin in Europe. DWTV Channels TV financial correspondent Ulrich Bartz joins me now from the Frankfurt Stock Exchange. Good afternoon, Ulrich. Good to have you again today. It's a beautiful Friday. Now, it's a day after the ECB decision. How is the market digesting those decisions by the ECB?
I think people are still concerned with it. Talked to a trader early this morning, and he said, yeah, that was a surprise that the ECB didn't move. You know, the negative reaction on that here in the markets, it wasn't all that pronounced in the end. The DAX lost some 100 points or so, and the trader said, well, you know, considering the level that it's at, not that serious, and the market today not really having any dynamics, but people are quite certain that the ECB will move as soon as it sees necessary, and people are assuming that such a situation will come up in the next few months, that inflation just won't get off the ground, that there will be growth problems, and that the ECB will see the need to, let's say, implement some of the things that were expected yesterday.
Now, Ulrich, looking behind you there, I can see that DAX is actually tilting downwards, and data coming out from there now says that Germany's trade surplus in July came in lower than expected. Of course, that's the latest in a string of weak economic data from Europe's industrial powerhouse at the start of the third quarter. Our French industrial production also dropped unexpectedly in July as output declined in manufacturing. What could be the reason for these disappointing data? And, of course, could that be the reason for what we're seeing with the DAX there?
That's certainly part of the reason. I mean, talking to the traders here, they were surprised by the negative export data. People were expecting a slight improvement, but all in all, they said, the level of exports, the volume is still quite high. And then at the same time, Germany also has an extremely strong consumer sentiment and consumer spending. Corporations are earning good money and paying high taxes, so the overall state of the economy is not being seen as that critical. But of course, if the export numbers had been better, then I'm sure we wouldn't see the DAX dipping like it is behind my shoulders. The reasons, well, economists aren't quite sure. There are different assessments there. One guy says that it could be the summer vacation time, which set in a bit earlier. That is, it's always connected with putting down production and thus having an effect on exports. And another says maybe it's the Brexit that's being felt and the general weakness in important trading partners for Germany. So several reasons, but I think one concrete reason doesn't stand out at the moment.
Right. It's the last trading day for the week. Could you wrap up the week for us and let us into what to expect in the coming week?
Yes, it was an exciting week because you had all sorts of company news. Let me just give two highlights here from the point of view of this market. There was Bayer and Monsanto, the news or the speculation that it could come to fruition. Bayer could have an agreement from Monsanto within 1 or 2 weeks. That was something for the market to talk about, as was the new Apple iPhone. And the Apple iPhone disappointed the people here in the market because they think it will disappoint customers out there. You heard remarks like, well, customers that are used to Apple bringing new products and products that you just want to have, well, this one won't have people racing to the stores. Next week, interesting, there's going to be an IPO here in Frankfurt, which is not going to be a true IPO, but there's going to be new shares here. E.ON, Germany's largest utility, is going to be split up into one unit that's going to be keeping nuclear energy power plants and renewables. That's going to be E.ON, the company that one knows. And Uniper is going to come to the stock market, basically a split from E.ON. And that's going to have conventional power plants. And the interesting thing is there's no selling of the stocks ahead of time. They just get put into the deposits of the current shareholders of E.ON. So the first day of trading for these shares, and depending on the price that they yield, will determine whether E.ON has billions and billions more in write-downs or perhaps not. So an important day for that industry and also here for the stock market.
Right, we keep our eyes on those numbers and we only hope for a better and more prosperous week ahead, Ulrich. Thank you for your time. And in Asia, markets ended mostly lower on Friday after North Korea claimed its 5th nuclear test and amid disappointment following the European Central Bank's policy decisions. Japan's benchmark Nikkei 225 ended essentially flat at 16,965.76, erasing early losses, while South Korea's Kospi finished down 1.31% after North Korea said it tested a miniaturized nuclear warhead in response to the threats and sanctions from hostile elements. Australia's S&P ASX 200 closed down 0.86%, and the Chinese markets fell in the last hour of trade after trading flat throughout the session, with the Shanghai Composite falling 0.55% and the Shenzhen Composite shedding 0.73%. The Hang Seng Index bucked the trend, closing 0.81% higher after reports that China was allowing mainland insurers participate in the Shanghai-Hong Kong Stock Connect. Right, when we come back after the break, we'll do a wrap-up of the U.S. market and of course, Ghana is pumping its first oil from second offshore TNN field. Do stay with us.